Hello everyone, welcome back to another video. In today's video, we're going to step into some of the basics of Bookmap and volume dots and even some of the footprint so that we can better understand when we are taking fresh trades or new trades or people who are new. So I got a request from a lot of you to start from the basics. Of course, we cannot deep dive really into the basics, but we'll go one by one and understand how powerful this particular platform can be, that is the Bookmap, and what are the various things that we see here that we can use to our benefit. So as you can see, we have the Nasdaq 100, the NQ futures chart that is running over here. So we also have the ES mini. So we're primarily going to discuss everything on NQ because of the volatility that we have, and it makes up for a very good way to scalp. The other part is about volatility is that you need to be quite careful with your psychology. Again, that is a topic from someday later, but we'll start one by one. So first of all, the tool that Bookmap is really famous for is this heat map, which you can see when I just change the brightness over here. So we'll start and I'll show you how the chart would look if we did not have this and the other features that I'm going to discuss, and then see how we can use them. And we'll start from a primarily basic level, and then go deeper into some concepts that we can use. So again, basic doesn't mean it is not powerful. Even the most simple and basic of tools and indicators that we have here can be really useful and helpful. You need not use everything. You can use even one and make money if you thinking about that. So the first thing I will do is I've switched off everything, that is the heat map and the footprint for now, and what you see is the best bid and ask. So if you're not comfortable with this, you can just switch on the last price. So you'll see something like this, and you can switch this off. So you just see the last price. I like the best bid and ask, so I switch that on and switch off the last price. So what that is, the market depth. So on the left side is the bid and the right side is the ask. So the topmost row that you see is called the best bid and ask. So you can see something like that over here on the right side. The difference is this has the entire chart book. So this is called depth of market on the right side that you see over here. Okay, so these are the passive orders, that are the resting orders. Now these are again also called limit orders. So when you see something on this on the right side, this on the upper side is the limit sell orders, and on the lower side are the limit buy orders. So if you look at a glance over here, you can see within this range you see a little bit of buyers more than the sellers, that is the limit buyers being more than the limit sellers. Again, for every transaction you do need a buyer and a seller both. So when people are saying that we have more sellers, actually the statement in itself is not true. What you have is more aggression from one side. Now like we just discussed, what we have over here is the passive buyers and the passive sellers. Now what moves the market? The passive buyers and the sellers cannot move the market. They're resting orders. What move the market are aggression are aggressive orders. So the market buy and sell orders that you see on the chart here with the help of volume dots over here, not the price line that you're seeing behind. The best bid and ask is not the are not the market orders. They are the limit prices at a particular point, and the dots that you see over here are the aggressive orders or the market orders. So when you see on I'll just get my tool on so that we can start and understand a little bit of basics, so that it becomes a lot better when you look at the charts and understand why is it so important, so that you understand within a chart what is happening. Okay, so when you see your market depth or your broker terminal, you see the limit buyers over here and the limit sellers over here. You can also call it bid and ask. Okay, so these are the common terms that I used. So when I have to when these limit buyers and sellers are here, and if I have to move the price down, for example, let's say we have a price of 7.5 over here, okay, and a price of 7.4 over here. Okay, so what does it mean? That someone is ready to buy at a price of 7.5, that is the best bid he's going to offer to you, and the other, on the other side, I have someone who's ready to sell to you at the best selling price is 7.4. Okay, so this is the way they generally, you will see your broker terminal or the bid ask placed. Now if someone has to come in and sell, I'm sorry, this is okay, this is fine. Okay, now if someone has to, let's consider, sell aggressively and wants to move the market down, and you have, let's say, 100 bids sitting over here and 120 sitting over here. Now if I wanted to move this by, let's say, the prices will be lower and it will keep going on like this, 7.4, 7.3 and so on. Okay, and there are about 20 contracts sitting here, there are about 10 contracts sitting here. Now if I want to move the price lower, what do I have to do? I want an aggressive seller, let's say with 300 contracts. As soon as he steps in and he gives a market order, market sell order of 300 contracts, what is going to happen is all these guys are going to be taken out. Okay, so it will go down till the time it reaches this level of 300. So what has moved the market down? Not the passive orders, but a market down by, let's say, 5 strikes. This is the minimum, or not get into understanding. Let's assume that this guy has taken these 5 rows down or 5 ticks down, and the market has moved down by 5 ticks, and it goes down wherever the next price level is, let's say at 7.0. Okay, so this is what is happening when we are looking at a market order. Okay, now again, if I switched it to, instead of best bid and ask, to, let's say, last price, this of course is the is presentation of the market orders, because this is the price that actually transacted. So obviously more or less these are the market orders that have stepped in and taken the orders from the buyers or the sellers. Now another common term that we generally get to hear is, again, I'll draw that particular table over here. Okay, so another common thing that we get to hear is lift the offer and hit the bid. Okay, so like we discussed, this is the buy column and this is the sell column. So if you look at it, it looks a little difficult for new people to understand, but by hitting the bid, I mean I am giving an aggressive market sell order like we just discussed. So when we hit the bid, it is moving it down. That is why it is called hitting the bid. If I have to lift the offer, if I have to buy something, the price has to go up, so it has to take out all the sellers over here. So it has to be aggressive enough, in a similar manner that we just spoke about market sell orders. It has to be exactly similar for a aggressive buy order. So if a buy order like that, like 300 contracts that we just discussed, comes in, it takes this back to maybe 5 levels or 6 levels, whatever it is. So that is why it is lifting the offers. All the offers that are standing here are being lifted, and the market then goes up. So these are the two terms that you generally hear. So don't get confused. There's nothing too difficult about it. It's as simple as we just talked about. Okay, so now we've understood what is moving the orders. So on this particular chart, the beauty of Bookmap is, I get, if I have a simple footprint chart, all I get is a market sell and a buy presentation or representation of it on the chart. So if I didn't have, let's say, the best bid and ask over here, okay, and I had just this, so these are essentially this is a sort of footprint. I'll switch on the footprint also later. So this is only market orders that are being transacted. I do not have a clue as of now how strong, or how many, rather, strong is not the right word, how many of the passive buyers and sellers are. Okay, so now again, you would ask that if the market is to move only with the help of market buyers or market sellers, what is the point in knowing what the passive buyers and sellers are doing? Well, the point is, more often than not, the big institutions and the big money are playing on both sides, and more often than not, they are keener on sitting at a place to get a better price and absorb the market sellers. So the weak hands are selling. Okay, that is why you see these big dots, the big market sell orders, but the market not moving down. So what would have happened, do you think? What would have happened that the selling, like we just spoke, there is a big sell order. I'll again go back to the column that I drew. Okay, so now let's, for example, we have the same situation that we just discussed the first time. Okay, I'll just discuss what is happening here, okay, so that you understand. Now, let's say we just discussed, so this is a level, let's say it is a 490 or 489, whatever it is. Okay, so let's have this level as 18489, and let's say a seller with and there were about 50 or let's say 100 contracts over here and 20 here. Now let's say a seller over here, this is let's say 100 contracts. Okay, a seller came in with 300 contracts. Now as we discussed, this is supposed to go down. Okay, so let's assume this is the seller. Now when he comes in, as soon as he comes in or just behind him, we see someone step in here with a passive order, and he just put in, let's say, 500 contracts, okay, over here. So what will the market do? These sell orders will come, they will try to go down, but this guy who's come here with 500 contracts and this is merely 300 is not able to absorb. Now he feels the need to come again, okay, and he comes this time with 600, or let's this order or this particular place with another 1,000 contracts. Okay, so this seller is trying too hard to go down, and that is why I just delete everything. You see this, okay, you see this big dot, this big market seller trying to go take the market down, but someone very quietly from the other side has stepped in passively with a resting order or resting orders, and this is not, this has not been able to go down. Now why do we know that there is some strong hand or someone big involved? Is because again this guy tries to take it, going to take it all up. Okay, now that is one part. Okay, after that, what does he want? After he's absorbed this huge amount of sellers, what does he want? He wants the price to move in his direction in some, at least for some points. It depends. Now all these guys, these big institutions and big money, or the smart money some call it, are there for some amount of time, some amount of points, some amount of some amount of money, of course. So some will get out here, some will get out here, but we don't know. What we are planning or what we are trying to do here is take these simple things that are happening on the chart at the lowest of levels and take advantage of it in the quickest possible time, take our buck, stay with the big guys and move out. Of course, we're going to be wrong a lot of times, but our aim is to get either be more right when we are scalping or earn more when we are right. Okay, so something like this is what I just explained, why in spite of having market sellers, the market has not gone down. The other thing that I would like to tell you is, now once this has happened, of course, like I said, we want aggression to step into for the market to move up. So you will see these guys step in the first time, and when the market moves above, let's say this level, I will just draw this level, okay, sorry for that. So whenever this moves above this level, we know a lot of sellers are here. They're going to get trapped and they're going to cover their positions, so the market will get fueled further. Okay, so that is why you see these boxes and these fractals which are very clearly visible on Bookmap. So this is what is, I've just explained what has happened here, and this is what we're going to make use of whenever in the future when we talk about Bookmap and we talk about the volume dots and we talk about heat map. Now let's come to the most important part, that is the heat map that we are here for. So as we discussed, this volume dot is again peculiar to Bookmap. The other thing that we have really proprietary over here is the number of passive buyers and sellers. So what if I knew the passive buyers and sellers that were here and their numbers were strong? What if I knew when this was coming here that their number is strong, so I have a clue even before it touches here that they might step in. Okay, so this is what is heat map. Okay, it gives you a pictorial depiction of the passive buyers and sellers at each level. So now suddenly the whole picture will change. On the right side, of course, when the market was going down, we had seen that there was the number of passive buyers was more. Of course, that has led to this. Now let's get into how this heat map is set up. Okay, so whenever there's an option over here, so you can choose if you want gray. These bright gray shades will show the number of passive buyers are more at this level. If you see over here, you can see these levels being plotted on the current order book. So this is COB, current order book, or the depth of market, whatever you like. So you can see with the color as well. What I prefer is this. So the dark orange is a place where I see a lot of buyers or a lot of passive buyers that are sitting on over here. Similarly, if I want to see a level on the top where a lot of passive sellers are sitting, it's here. And something similar to what we discussed just a few moments back for the selling has happened here on the buying side. So I can clearly see that these guys, okay, so this is the other way of calling this is liquidity. Again, we discuss about liquidity in the coming few sessions. It will become a lot for people who are new and who are trying to understand Bookmap, to understand so many things at once. This is also called liquidity. Again, we'll discuss it later. But over here, what we see here is market also tends to a lot of times what it'll do is, like it has come, it has gotten absorbed here. A lot of time what will do, it will come here, absorb these sellers as well, and then go down. Okay, so I'm sorry, yes, it's a lot of these sellers also, they take their stops and then go down again. It's the way the markets move. It is the efficiency with the market is always trying to be in a state of good efficiency, and that is why this happens. Okay, so now what we see here is the other way. One more way to use the heat map is when you see something like this, and let's say this was not there, this was blank, and these many number of orders were not there, and suddenly when you see this absorption happening. Now what is absorption? The cases that we just discussed, a lot of market buyers coming into the play into this market, and at this level, as we just discussed, there is a big passive buyer which we could see over here. Like we just spoke, it has taken the liquidity and gone down. Now again, you don't know what these guys are. They can be passive buyers, they can be passive sellers, they could be breakout traders, but as of now, we just know with the help of this. Again, this is passive, obviously passive sellers here, what we see over here, but I'm talking about this moment over here. You see a lot of buying. These can be stops, these can be new traders who are trying to come in and buy the market, so that expecting the market to reach this level, but it doesn't, and a lot of them are not successful. So this is called absorption, where a lot of market buyers are there, but the passive sellers have absorbed everything, and the market doesn't go beyond that level, and it fails. And of course, then we see what happens, and it keeps happening like it's happening on the downside, and this is what we get. Okay, so just a quick small tip. We'll go into detail in the coming sessions as well. This type of activity does not happen all the time. So what will happen when you start using these tools is, whenever you see something like this, you would like to go short, and whenever you see something like this, you would like to go long. That isn't always the case, because sometimes this is a market which is a balancing market. It has been there for a few days in NQ, as we know, and most of the time, 70 to 80 of the times, the market does behave like this. But on the 20 or 15 to 20%, the market trends, and that is where traders who try to fade moves like this really lose out a lot, because then you start revenge trading when the market goes against you. You keep trying to short, you keep trying to average, but the market will just move in one direction. You're helping or fueling the market to go in that direction. So always remember the type of day you are dealing with. It generally plays out, or you can understand the type of day within the first 1 hour. We'll again talk about it later. But you can see, even if you're stepping into trade right now, so the market has been open for an hour and a half now. So even if I see right now, I can see, let me go back and do this. I can see what is happening. So I can be confident when I'm taking, let's say, a fade trade. That is, I can be confident when the market touches this place and I want to take a short trade if I see the conditions right. So when the market comes here, do I blindly take a trade? No. Again, I am looking for something like this to happen again. Only then will I take a trade. The other thing that I want to see is when something, what has happened in the background. So again, like we just discussed, in the background, we've seen that a lot of fade moves have been successful. Now, the contrary of absorption is aggression. So what if, let's say, when there is a buy order, the market takes a support over there and moves up, then that becomes aggression. For example, let's assume that there was a buy order here, these three big buy orders at this position. Now the market does go down after this. It goes down after the second time also, but the third time when this big order comes in, it tries to go down and rather the sellers are absorbed. So this is a level where I have seen aggression and not absorption. So these are the two concepts. They're quite simple. If you just observe them for the next 2 weeks, you will understand. So these are the two concepts that you have to keep in mind: aggression and absorption. So whenever you are entering a trade, okay, the first thing you need to ask is, why are you entering the trade? Are you entering the trade based on an aggression that you have seen, or have you entered the trade based on an absorption you have seen? Now, like we just discussed, the first thing that you need to understand is, after all that we've discussed, when is it likely that your aggression trades will succeed? The aggression trades will succeed on a trend day. On a trend day, absorption trades will not succeed or will not have a higher probability. So on a day like today, you will not have a higher probability if you're trading aggression. You will have a higher probability if you're trading absorption. So hopefully this clears some of your doubts, some of you had, and it helps you in trading. So before we close the session, we'll just switch on everything and see if we can find something of of relevance to us, of like helping us to take a trade. The other thing I like, again, I will discuss it in the coming sessions as we are short on time today, is this thing that I call the footprint. Okay, so like we just discussed, footprint gives an idea of the market sell orders and buy orders. So what I get when I switch on everything is, I get a handle of the market sell and buy orders, I get a handle of the passive buy and sell orders, and I can where everything is. Again, in spite of having all this, it doesn't mean trading is easy. It is tough, but it is what it is. So we can make the best of what we have, and decipher all the information we have in a better manner. Now, this is a range chart. Again, we're going to discuss it further later on. If you look at this part, okay, what do you see? You see a lot of buy orders that have got absorbed. Like I said, if you're looking for 5-10 points, this is a place where you can enter because you've seen absorption. It is a balancing day or an inside day, some call it. That is why we are working on absorption. Similarly, when the market goes down, there is a level beyond which, if you just switch off everything, there is a fractal that is formed here. Okay, you can see immediately how you use heat map at this level.